Alright guys, welcome back to another video. So in today's video, I'll just be talking about my strategy and how my strategy works. So technically the strategy is built up on three key parts. Number one, that's lead up to the entry. So first we have a buy side liquidity or sell side liquidity. This technically brings up the strategy together. Then second, we'll probably have, I'll get into this into the next one. Then second, we usually have a break of structure leading up to this. Then the third thing that we have is a fair value gap to retrace back into it. So this has given me a 80% win rate. Let me just fucking talk about that. But yeah, technically. So this strategy, it's easy to learn and to grasp because it's not that hard to learn the strategy. Of course, we get into it and show you guys how these strategies play out in the market. But usually, this is technically the basic part of the strategy. Just looking for buy side, sell side liquidity. Also, you need to look for the trend. Let me add this in. No, I didn't turn it down here. Trend. If you need to look, you also need to look at the trend. Technically, technically, my whole entire strategy is built up around this. Built up around you're looking at this trend, where you're looking, if you're going in a bullish, bearish trend technically, then I'll show you guys two examples of how the strategy actually works. But if not, let's hop out to the markets now. I can show you how we actually execute these strategies on the markets so that you guys can also jump in and absolutely destroy the markets. Energy short. Okay, so here we have GBP USD. So I actually took this L yesterday, just because of the placement. Literally, I could tell you now, bro. It touched my stop. It didn't even go past. It actually touched the neck, the top right there of it, and just absolutely dumped straight to my TV. So what I usually do, I jump into the 5-minute time frame. This is how we find our buy side liquidity, even though I'm in a time frame. I usually use the 15 and 5 to look for our buyers, so you know which we are moving, which trends. So for the bearish side of it, so you need to look for buy side liquidity first. Of course, it's buy side liquidity right here, of course, right. So if you have buy side, let's say most people think that you have buy side here. After the buy side, we have a break of structure. No, the break of structure actually built up of this bottom piece over here. So it's from the downtrend. Even some people did take this right here, as what you call it, as the break of structure. It's okay, because we still tap back into the fair value gap. And you can tell right here that there was a fair value gap that was built up into this part over here. So you could if you just take it like that, fair value gap, tap back in. So you could have entered in right there. Could just taken. I also talk about stop losses and take profits. So technically, so once you find your buy side liquidity, now what you're waiting to see is a break of structure. So we had break of structure right here, and right here. So I took it off this break of structure right here. So technically, let's play this out. So you can tell that the markets failed to create a higher high. So now we're in a downtrend. So as you can tell, that we're in a downtrend. Let's talk about the fair value gap that you're getting. If you're getting bearish, fair value gap is that technically in a downtrend. So you just wait for the downtrend, break of structure. You wait for price tap back into this 5-minute fair value gap right here. Even this fair value gap right here. you still could have taken it off this one right here. That's still a good fair value gap to take it into. It's actually becomes an in. No, that's not. Sorry. But also have a 5 minute IFG right here. Then when it comes to take profits, you want to move into the higher time frames that you can find areas to target. So like here, you could have just targeted for like these levels of liquidity. Like there's a good example right here. You could have just targeted for those levels. Maybe some people just wanna go for a light day. Maybe just go for something around here. These levels of like areas we can go for to take your TV. What I think is the best thing to do with your stop losses. Try check them. Try put them 2 pips away from liquidity, unless if you know like straight up, or even from fair value gaps. But that also might become like a problem of IVGs. So that's literally it for the bearish movements or the strategy. Bearish taking using buy side liquidity. But when it comes to bullish ones, so right here we had this buy side liquidity on the 5 minute time frame. So right here, so we had the sell side liquidity right there. Then we had the break of structure. So when you're looking at it with sell side liquidity, you have to look for break of structures. Once you find the break of structure, you wait for the 5 minute IPGs, fair value gaps that you can tap back into. Once you tap back into those key areas and these fair value gaps, that's what you know. Just aim for higher levels, like you just aim for right here, and for here. Or of course, don't try aim for like somewhere around here, unless we know that the market's already gonna move up to that key level, because you see someone would enter right here, then they would aim for right here. I'm not saying it's a bad trade, because it is a good trade. Because they aim for right there with their stops, something like around here. But you see yourself, uh, here. Markets are about to close, and you still haven't closed your position, and now you're up. Let's say if you closed. So you see, just don't be stupid with where you check your TPs. Of course, you will believe in the 1 hours. Of course, the 1 hours do work. Maybe on a quick trade, do not hold it for too long. Just take a quick 1 hour, because it helps me personally. I should take quick 1 hours if I just know that I just wanna make a little bit of profits for the day. Like if I don't go ham on the market. So that's literally it for today, X. Yeah, thanks for watching, bro.